The wheels on the bus go round and round. The wipers on the car go swish, swish, swish. The engines on an electric vehicle goes... What sound does an electric engine make? Does anyone know? Electric cars. Apart from the sound, I also don't know much about this industry. I think it's time we start expanding our search for what companies to invest in this industry. Electric cars are still cars. I mean, the cars are sexy, but don't they need tires, batteries, mirrors, seats and all of that? Somebody must be making them. Who are they? Which companies are involved and how can we profit from them? Hello fellow motorists of the future, it is me Ali, your humble VIA coach. Just like how you honk at lousy drivers in front of you, come, click on the bell icon and subscribe to this channel. I'll love you for it, but not in that way. Today, we will look at some businesses that support the electric vehicle industry and analyze if they are safe investments. To understand where I'm going with this, let's start with a map of the industry. What are the different components we should note in this industry? To be honest, there are hundreds of components, but I will focus on 3 which I think are absolutely key. Without this, the industry is useless. First, it's the vehicles. Tesla being the most famous one, but many others are catching up. Then we have the battery manufacturers, without whom the cars would not run. And lastly, we have the charging station systems that are like our petrol stations. It's a 3-leg stool. Cut any one of these legs and the stool will fall. Okay, let's put this information aside. Let's look at this industry in terms of its geographical spread. Okay, quick, tell me, which country is leading the charge in electrical vehicle industries? Probably your mind went to 2 countries, right? USA and China. And you would not be wrong if we were considering the manufacturing aspects of things. However, we should also consider the adoption of electric vehicles in the region. And surprisingly, the US is actually lagging. From this chart, we can see that China is leading the pack in terms of number of cars on the road. Second is not the US, but Europe, amazingly. Then comes the US and the rest of the world. This is important because the more cars there are on the road, the more services these cars will require, which will also allow more companies to come in and service the cars, which will allow other players to grow, and we want to find these other players before others do. So, if you are in Europe and have access to a European stock exchange, you can start looking for the gems. However, I specialize in US and SG stocks. So if I can find a US or China company stock, that's where I want to place my money. So, we have just learned about 2 new things. There are 3 main components to this industry: cars, battery and charging station. We have also learned that geographically, the cars are mostly in China, then Europe and then the US. Cool! Let's look for our fish to catch, or should I say our engine to zzz. Zzz. Let's start with a quick look at the major car manufacturing players out there. Tesla, we all know. Too much information out there already. Who do you think is next? Who is the next biggest in terms of market share in the world? Even I was surprised, but apparently it's VW Group, Volkswagen. As an investor, I would go and study into the VW Group and General Motors as well to see how much of their revenue is in electric vehicles. VW sold 231,600 units of electric cars out of the 5 million cars it sold. That's about 1/10 of cars. Still small, but that means there is serious room for growth. VW are also planning to invest 27 billion euros into the electric segment. By 2024, Project Artemis will be launched for the Audi Group, and in 2026, VW will follow. These projects are to create fully electric cars, which are an entirely new way of looking at electric cars. Now let's talk about GM. So GM is about 4th place in the world, but I couldn't clearly find out how much sales is generated from selling electric vehicles, because GM has electric vehicles under the brand of some of its older petrol cars. However, I did find that GM is selling only about 1/3 in numbers of electric vehicles compared to Tesla. That being said, GM is going to spend about 35 billion next year to roll out more battery electric vehicles. It still stands behind Tesla, but they are catching up and have plenty new models lined up. So while these car manufacturers look good, I urge you to study further into their business, because electric vehicles is not really their biggest segments yet. So some analysis is needed on whether to buy these companies or not. Okay, let's start with batteries now. Tesla is again unique on this front because they manufacture their own batteries. But what about VW Group and GM? Who makes their car batteries for them? Now, for clarification's sake, I'm not referring to the small box in every car which we have to jump if we leave the cabin lights on. I'm referring to the whole battery pack that drives the car. So, who makes these batteries? Well, according to this site, the two largest companies are contemporary Amperex Technology Co, or CATL, and LG Energy Solutions. According to their site, their market share is 21.6% and 21.4% respectively. That's like almost half of the whole battery market put together. Let's look at CATL first. Based in China, their core business is making batteries for vehicles. They have a very slick website, sexy almost. They make batteries for different types of vehicles like passenger vehicle, commercial vehicles like buses and trucks. Energy storage for buildings as well. For example, they also do battery recycling. This company is an all-rounder. Almost from the birth to the end of the life cycle of batteries, this company is involved. The company is listed in Shenzhen and the ticker symbol is 300750 on Morningstar. Let's see if the company is cheap and a good buy. Price to sales is 18.16, price to earnings is 99.01, and price to book is 20.15. And I think I'll just stop here. Past 5 years of revenue is growing, net income is positive and growing, cash flow is growing too, but is it cheap? Well, PE ratio of 99 is really high. PE of 99 roughly means that every dollar of stock I buy, I will have to wait 99 years of earning to break even. So no. This company is too expensive for a value investor right now. Now let's look at LG Energy Solution. This is a subsidiary of LG Chem. I wish I could buy only LG Energy Solutions, but unfortunately it's part of LG Chem. This company is listed in South Korea and the ticker symbol is 051910.ks on Yahoo Finance. Asian countries usually like to list the stock price in letters and numbers. Too organized. Anyways, coming back to LG Chem. LG Chem does more than just batteries. Other than energy solutions, they also work in petrochemicals, advanced materials, life sciences, and Farm Hanong, whatever that means. From their fourth quarter 2019 investor presentation, we can see that energy solutions made up about 30% of revenue for the year. Now, 30% is not amazingly large, but from their charts we can see that petrochemicals is decreasing and energy solutions is increasing. It has almost doubled in just 3 years. Let's start with a look at some of the simple metrics. Price to sales, 1.53. Price to earnings, 21.01. Price to book, 3.16, and debt to equity is 0.44. Still on the expensive side for me. But a deeper look at the financials and something fishy is going on. The revenue has been climbing over the past 5 years, but net income declined and so did the EPS. This year, it might even end up in the red. So while the energy solutions revenue has been growing, as a whole, we need to read through the annual report and comb through the details to find out what's happening in LG Chem. With these basic financials, I'm just not sure yet. So we looked at cars, then we looked at batteries. So far, I would only put my money with VW. But if I really had to, the other three companies, GM, CATL and LG Chem, not too sure.